Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/rive to receive the top 10 stocks to buy right now. Tesla reported earnings this week, and it was one of the most interesting earnings reports and conference calls that I've heard in a really long time. Management actually gave a lot of indications about how they think about this business long term, and it's maybe a little bit different than the way that a lot of investors have been thinking about it. So I want to go through 4 quotes that I think really tell a lot about how Tesla is managing the business and how we should think about Tesla going forward. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube for all my content and turn those notifications on so you know when a new video comes out. The first quote I want to go to is a quote from Zachary Kirkhorn, the company's chief financial officer. Automotive gross margin was impacted by a few factors since our discussion in the last earnings call, which included additional action taken in the second half of the quarter to improve vehicle pricing. That means lowering pricing, and one-time items, most notably warranty adjustments on older S and X vehicles, as well as increased deferred revenue from certain autopilot features as we transition technologies. I want to break apart a couple of those pieces here. The pricing piece is pretty obvious. Tesla has been lowering the price of its vehicles. That's going to impact gross margins. I don't think there's a lot of question there about what's going on. The warranty adjustments is where Tesla is saying the warranty costs that we had put on the books are actually higher than we thought they were. Companies will often do this, and there will be adjustments higher or lower. But when adjustments are higher, it means that whatever costs they were putting on the income statement previously were not appropriate. It means that margins that they reported in the past were actually too high because they should have put higher warranty costs in those. So that's actually kind of a red flag because it's indicating that vehicles that have been on the road for quite a while are actually having much higher warranty expenses than Tesla previously anticipated. Now, we don't know if that will continue in the future, but we do know that Tesla's quality ratings have actually come down from third-party rating agencies. This is something we're definitely going to want to keep an eye on. Do these adjustments continue in the future? And does Tesla start putting more warranty expense into current vehicles, which would actually hurt gross margins in the future as well? So this is definitely something that is probably not just a one-time item, and we'll see how it plays out in the next few quarters. The next quote is from Elon Musk, and I think this one is the most telling for the quarter and for the vision of the company. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. And I'm going to move directly into the next quote, which is also from Musk. It says, "We do believe we're laying the groundwork here, and then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy." This is an extremely important point. So Musk is telling us everything about his vision for the future of Tesla right there. He would like to get as many cars in people's hands as possible with the idea that in the future, they will sell autonomous driving to those drivers for some sort of high margin in order to create a robo-taxi fleet. That's another thing they talked about in this call, is that the vehicles that are being shipped today supposedly have the hardware capability to become a robo-taxi. Now, what exactly that means, I don't know. But that is Musk's vision, is that they literally said multiple times in the call that they could sell vehicles at zero margin because they would make margin in the future. I have a lot of questions about that because I question whether people will want to pay for autonomy for an older vehicle. I even question paying for autonomy for a vehicle that should be fun to drive in the first place. But there are plenty of people that do that. But this is clearly the bet that Musk is making, is that giving up margin now will lead to margin in the future because of full self-driving autonomy. We also have no idea when that autonomy is coming, what a robotaxi fleet will look like, how many vehicles will be in it. But there's some sort of future, but he's selling some sort of highly profitable future that we don't know it exists. If you want to bet on that, that's the reason to be bullish on Tesla stock. I question how much people are going to pay for those kind of autonomous features, especially as your cost of vehicles come down. Somebody who's looking for a $30,000 vehicle is not looking to pay $15,000 not to drive it, just to have autonomous features. And I also question whether people are going to want to have these Teslas that should be highly valuable just driving off on their own, picking up random strangers as an autonomous taxi service. I just have a hard time believing that. And what I just said kind of leads into the final quote. And this was a question related to the take rate for full self driving. So basically, how many people are paying for full self driving? Musk kind of dodged the question here, but did give an indication of how he's thinking about this. To kind of answer the details on FSD take rate, it's a tricky pricing question because the value of a car that is autonomous is enormous. So, in a way, the price right now is an option value on an autonomous vehicle. And that value will ultimately be very significant. But the trend is very clearly towards full self driving, towards full autonomy. And I hesitate to say this, but I think we'll do it next year. We have heard Musk say this over and over again over the last half decade that full self driving is only a year away. So take that piece with a grain of salt. But here again, he's confirming what I said a little bit earlier, that the value in Tesla as a company is going to be in full self driving and in selling those features to vehicle owners in the future. So if you're buying a vehicle today for $35,000, Tesla fully intends to sell you autonomy features in the future. Whether or not they'll be able to do that is another open-ended question. And this is clearly the way that Musk is thinking about the business. And I think this is what investors have to think about. Are you okay with owning a vehicle manufacturer who is willing to basically break even selling vehicles in the hopes of in the future creating a fully autonomous fleet of vehicles that they don't actually own and that people will ultimately pay for that autonomy service? That's a big question mark to me, but that's absolutely what Tesla is building, and that's the direction that Musk is going. So I'd love to hear your thoughts on these trends and exactly what Musk said about the future of the business. I think this was really telling because the margin story from a near-term perspective has kind of fallen apart the last few quarters. And now they're shifting to, well, there will be margin in the future when we get to full autonomy, whenever that is. But leave your comments about this in the comment section below. I'd love to hear from you. Thanks for watching, everybody. I'll see you here next time.